All right, gang. So in our trend analysis class, you guys are going to get a sense of direction. You're going to learn how to understand direction. So as a new trader, you're going to want to know, how do I know which direction to trade? Should I be looking bullish? Should I be looking bearish? Should I be looking neutral? This class is going to actually teach you guys how to understand those different trends, okay? Now, the cool thing about being an options trader is that you can make money in any environment. It doesn't matter if the market is going up, you can make money. If it's going down, you can make money. Even if it's chopping around, going sideways, you can make money, because in options, we have a strategy for every different, environment, okay? Every different trend, or whether there's no trend, whether it's just volatility. So many different options to make money. So that's why it's called options. So it's important to understand direction, trends, okay? So what we're going to do is I'm going to take you guys to the charts here, and you don't have to copy anything I'm doing. This is just for demonstration purposes. We're going to take a look at the S&P 500, which is basically the top 500 companies. Whenever you hear anybody talking about the stock market as a whole, the stock market moved X and Y points. They're talking about the S&P 500, okay? So this gives us a sense of how the overall market is moving. And we measure this, and we get, ideas. We get information about the direction of the market, where it's going. Now, the father of technical analysis is Charles Dow. So you want to go further with the study. It's pretty boring stuff, but you can take a look at any work from Charles Dow to get a sense of all these things. He really explains these things in a really nice template of framework. But basically, to make it simple, what we want to look at here is the charts, okay? The charts is going to give us a sense of direction, okay? Don't pay attention to any of these people that's on the web that's saying they don't use charts and candlesticks and all that other stuff. They're just looking at numbers, because you're looking at numbers. I can't show you no patterns from that. But if I show you the charts, you can see the patterns easy as day. You can show your grandmother this and she will get it, okay? Basically, what we're looking at is the direction of the order flow. We're looking at the direction of the candlesticks themselves. And you can easily, pick it apart when you see the highs of the candlesticks and the lows of the candlesticks. And they will move in a pattern, they will move in a trend. And what I'm going to do is I'm going to take this little trend active tool indicator, and I'm going to select this trend line tool, because this is an easy way for me to show you guys this here. So that's why I'm going to use this tool here. And you can do it yourself if you want to follow along. Okay. So what I'll do is we'll start here in 2009, and I'll take this bottom candlestick. I'm going to just click on that, and I'm going to drag it all the way to the top until it ends. Bingo. Okay. And then I'll do the same thing up here. We'll take this, we'll take it all the way to the top, about right here. We'll just take it like that. Okay. So what am I looking at? I am looking at a uptrend. I'm looking at an uptrend. I'm looking at a bull trend. So when the stock market is going up, we call that bullish trend. Okay. And how do you know it's going up? Is because the highs of the candlesticks themselves, the highs, they're continuing to go higher. You see, they continue to go higher. Highs continue to go higher. And the lows also are going higher. Okay. So the lows, when it retraces, retracement means that it's coming back, but it hasn't broke the trend. Okay. Investors call retracements healthy pullbacks, because we like to see the stock market pull back some so that we can engage and get in at a better entry point and ride the wave, continue to ride the trend. So we call it a retracement. So when it retraces, the lows are higher. We can see every point, the lows are higher. Okay. Lows are higher. So the easy way to remember this is that bull trend is higher highs and higher lows. Okay. Higher highs and higher lows. That is a bull trend. Now, a bearish trend will be lower highs and lower lows. All right. So we can actually just come back. Let me just go here, because it's a better trend for you. The highs of this trend, they continue to decline. Okay. They continue to decline until that trend was interrupted. The lows also, right? The lows continue low. Let's just take this low, and you can see how the lows of this here continue to go lower. That trend continue low and low. So when you're in a bear trend, you want to identify, bearish stocks, and then you want to apply bearish strategies so that you can make money. And it's basically similar to the law of physics, the law of motion, right? If you think about things, it's like in nature, you think about if you're driving a vehicle and you're accelerating, but you let the foot off the gas, the car is going to continue to go in that same path because it's in that motion, and it's more than likely going to continue in that path until something interrupts it, okay? But if nothing interrupts it, it's going to continue to go in that path, all right? So in the stock market, we're gauging it the same way. It's because it's moving in that path, then all the stocks are going to move with that, or that particular stock is going to continue to move in that direction until something interrupts it, okay? And so that gives us a high probability direction where you don't have to be a psychic or anything. We just see the charts, right? So the charts are showing us this is moving up. So ideally, my direction is up, okay? So I see an uptrend here. So we see the downtrends and we see the uptrends, and then the choppiness or the sideways market will be, let me see, similar to, let me just remove some of these lines here. All right, so a choppy market is like an indecision. You have, the bulls and the bears, they're pretty much equally contested, okay? The bulls don't really have an edge. The bears don't really have an edge. And you really get these at the tops, right? You can see, just my cycle. Okay, here we go. Right before you go to, a pullover, you can see, like back here, it's really not like a trend, right? Even if you look at this one, same kind of thing, chop sideways. Even up here, you see how like it's, I can't really hit it that, defined, but you can see that they're evenly matched, okay? And that's a neutral, cycle there, right? That's what I call choppiness. That's no direction. We don't have a direction. This is a neutral market. It's a neutral phase of the market. And so you'll get neutral strategies that will work ideally with the direction like that, like as far as like iron condors and things like that. Those strategies work pretty good in these type of environments. So that's the neutral phase. So again, I covered with you guys the bullish trend. We went over the bearish trend, and we also looked at the neutral phase where it's not a trend. And remember, lower lows and lower highs is bearish. Higher highs, higher lows is bullish. Okay, so you can just remember that, then you're good to go on the trends themselves. Okay, so what I want to do is show you guys here when we take a look at the overall market itself. And remember, these same principles, they work on individual stocks as well. So just take a look at the overall market. We're going to go back through the recessions, okay? We go back through 2000 dot-com bubble from that high to this low. And I'm going to actually pull out the edit properties. I'm going to go to show the label, and we're going to put always. And I want to show this on the right side. And I'm going to hit OK. And this is going to tell us that we had a 50% decline. And the reason I'm showing you this is because when you hear any of the news publications talking about if we're in a bull cycle or bear cycle, they're talking about basically advances or declines of a 20%. So if you get a 20% drop in the stock market, then that is indication of a bear market. Okay, so it has to exceed 20%, and they say now we're entering into a bear phase. So you may hear that term, and I want to show you that. Let me duplicate this drawing, and I'm gonna put this on this one. And this was the 2008 Great Recession, okay? And you guys can see that one was 56% decline, so that breached the 20% phase, right? And then currently, what we're currently living through, I want to show you guys this. We're currently in, we just completed the longest bull market in history. This is 11 years. So I'm going to show you this here from there, from that low to this high. And let's actually pull it out so you can see it. I'm going to go to always. And we'll show this one on the right side as well. Oh, actually, let's leave this on the left. Okay. So it's down here from there to there. Okay, you can't really see it from there. So what I'm going to do is I'm going to take it on, put it on the right side. On the right side. All right, bingo. Okay. And I had it at the bottom. I don't know why. Let me activate this and take it to the top so you can see where this really went to. So 400%, okay, rise. And you can take a look from 2009 all the way to 2020. All right, this was an 11-year bull cycle, okay, bull trend for 11 years. You could have bought any stock pretty much, and they were just going to go up because that's where everything was going up. So you had a lot of people that laid a lot of money. And although many people look up to these guys with degrees and things like that, if you take a look at some of their portfolios, there's really no genius work in it. the cycle itself, the trend was the phenomena that carried everything over. If you just held through long enough, then you would have made money. Long-term investors, they take a look at the primary trend, okay, which is what I'm showing you guys here, the primary trend from the S&P 500. You can see when that moves up, pretty much all the stocks is going to move up in that sector. They're going to move up with it. Okay, so you didn't have to be a genius to pick it. In fact, they had studies with monkeys making stock picks, and they were making more money than professional traders, right? Who would ever think that, right? That's because the trend itself was moving up. Okay, so you want to be at the right direction of the trend. In the bear trend, when it's bearish, you want to use more bullish strategies. But for long-term investors who's using the primary trend, they're actually using that as an indication to sell. That's how you know when to get in and when to get out. So you want to ride the phase, you want to ride the bull all the way up. And then when you get out once the trend ends. So as of right now, we've just entered into a bear market recently as we speak right now. But it hasn't been one in over 11 years, okay? So the trends are really important to understand, but it's easy to see. When I show you guys a chart, you can just easily look at if it's going up, if it's going down, and that's what we actually use to identify trend on individual stock names, right? So we're looking at Apple, we're looking at Google, any other individual stock. We're paying attention to them in the same capacity on different time frames, okay? So that's basically your trend analysis there, and that's how you get a sense of your direction. So I really hope you guys enjoy this course. Catch you in the next class. Peace.